So good morning, everyone. New appointment on Future Proof. This morning I'm with Sham. Good morning, Sham.
Good morning, Sergio.
Long time friend from the old days in London. Good talking to you. Good meeting again and having a chat this morning. I will maybe give you a couple of minutes to introduce yourself because anyway, I mean, people listening might not know you, and then maybe we get right to the point.
Sure. No, thanks for that. I'm the founder and managing director of a investment bank called Agnitio Capital, which was founded in 2003 in London. Really, what we are is kind of a hybrid investment bank. So we started off as kind of a pretty typical mergers and acquisitions, boutique firm, but the way we distinguish ourselves is we solely focus on the video games industry. And we also invest into companies in that space directly off our own balance sheet. And we've done that about a dozen or so times. Our remit or geographic focus is pretty much worldwide. What we specialize in is working with founder-led organizations, entrepreneurs who've typically been running their businesses for a long time, and that realize, at some point in the future, it's time to sell the business, and they've generally established a pretty profitable, viable, growing business, and then we sort of help them think through, what are the strategic options that are best suited for their personal and professional objectives, and then try to obviously maximize shareholder value. So that's us in a nutshell.
That's good stuff. A question which I think I never asked you in private: how did you come the vertical on gaming? Because I still remember that when I met you, you were a little bit more spread on different businesses, while at some point it came the focus on the gaming industry. Is it a passion?
No, it's a good question. So I think it's a couple of reasons. So one is I always was a gamer from a child, starting with Atari, Commodore 64, playing games like Space Invaders, Mario, Donkey Kong, etc. So I'm talking from the 80s, and then going through different consoles, along the way. I've been a gamer my entire life. It's something that I'm pretty passionate about. Of course, now I don't have the same amount of time, given that I have two small kids. But whenever I do have time, I certainly try to keep abreast of what's trending, especially on mobile, because that's kind of the more ubiquitous new platform. So that was really one reason, is just having that background and that interest in games. But I think the second was when I moved to London from New York 20 years ago. I was working at kind of an investment bank that also had similar hybrid model to what Agnitio does, and they were investing a lot out of their own balance sheet, and that's where I started getting the first exposure to the European games industry. And what I noticed was that the industry is very fragmented. You had a lot of talent in a lot of different places, and a lot of different countries, and so I think even then the industry was still emerging, especially in Europe, but you had a lot of world-class talent, but that needed a lot of business and commercial skills. And so that's where, I thought this could be really interesting, is to find a lot of these emerging, fledgling businesses, but that had a lot of great, development talent, but just didn't know how to capture, or transition into a viable business. So yeah.
That's very smart. Actually, I founded a consultancy company, advisory company, destructuring company, whatever we're going to call it. We don't really dare saying that we are an investment bank yet, but we follow pretty much the same principle. We call it the domain expert or the market expert theory, which means that if you find a specific niche where you have a lot of competencies from the founders with lack of business strategy, fundraising, and all the accessory, if you want, skills that you need anyway to grow a business, otherwise it's not going to work, that's a sort of sweet spot. So we're still not investing out of our balance sheet, but we use it more as a club deal, right? So we structure the deals, we source the companies, and then we go back to our network of investors. But it's a great model, I think, which has been lasting for years. There's not many people really looking into that direction. It's more like entrepreneurial sort of activities, right? From people like us who has been in the industry for a long time and see the spot. Otherwise, it's not a.
I mean, think about it this way, Sergio. I mean, you're really passionate about it, right? I think entrepreneurs, serial entrepreneurs like yourself, like me, who really enjoy building companies, will find what they're really good at, what skill sets they could, hone, and then be able to, impart that knowledge, that expertise to other companies or industries that you have, clear competence in or expertise in, and then just help grow companies. Because that's the really exciting part, right? I think we both share that, is how can you use the skill sets, wisdom, knowledge, track record, and apply that, and ultimately make it beneficial for all parties involved.
Which makes a lot of sense. That I don't know if you agree with me, a comment out of the blue, but after a few years that we're doing this exercise, it happened to me that I was looking at the business plan just a couple of days ago. Was, I don't know, over 300 pages, right? Wow. It took me 2.5 minutes to point the finger into just the spot that was right to raise, which was marketing strategy, budget allocation on product distribution. That's where I think we become very valuable. It's not about writing papers. You see a lot of consultancy or businesses similar, which tend to, how do you say, produce tons of papers from the business model canvas and SWOT analysis. So I go back to school sometimes and say, imagine when I was studying all this stuff and 20 years into the business, you sit down and say, yeah, it's cool. No, I mean, I can use it to start building a sort of understanding of what I want to do. But I mean, pointing money and actually trying to raise capital on a business model canvas, not sure about it, right? So it comes down to the ability to then interact with the funder and simplify the whole process. Because simplification is always the hardest thing to achieve. Okay, let's try to dig. I'm very curious to chat this morning because I know nothing, to be honest, on the gaming industry. I actually Googled this morning a few numbers. I went on gameindustry.biz. I looked at a few websites just because I wanted to be prepared. And I actually saw quite big numbers going on in terms of acquisitions, in terms of fundraising. So why don't you give us, I don't know, a bit of an overview on what's going on?
Sure. Yeah. So, I mean, look, I think there's a couple of things to be aware of, right? So the video games industry has become the dominant form of entertainment. And that's been the case for probably going back 3, 4, 5 years now. So it's in terms of actual revenue or sales generated by the gaming industry, it's almost 3 times the size of Hollywood, right? So when you think about, the amount of money that's generated by the console platform, the PC platform, and the mobile platform, right? And what's really kind of turbocharged, I think, numbers has been the mobile industry, which really before 2010, 2009 was kind of really very, very small. And so it was the advent of the Apple App Store and then Android following suit with its own kind of app store that really just exploded, right? It just exploded. And then the mobile industry grew from basically zero in 2009 to over, kind of $120 billion, currently. And then if you add on, kind of the console and the PC industry, you're looking at kind of an overall industry of, 170, $80 billion. So it's a very, very large industry now. It's there's no other form of entertainment, as I said, that can compete. So that has created, as you can imagine, a lot of companies, publishers, businesses, peripheral companies that have just grown exponentially, especially in the last 4 to 5 years. And then what does that mean in terms of M&A? Well, the appetite for gaming companies, especially from an institutional perspective, public company institutional perspective, has increased dramatically, right? And particularly in the last 3 to 4 years, because a lot of these investors prior to that had the perception that the games industry or companies operating in there were just a hit-driven business. You get one hit, great, but there's no guarantee that you're going to repeat that success again and again. And so I think the dynamics have changed a lot, especially in mobile and even PC, where the game development process is so much more data-driven. So you can really test the response to a game in Steam in early access, in mobile and in kind of soft launch, and you can get a lot of early metrics, right, and KPIs to determine whether it makes sense to continue producing that game, continue developing, and then potentially, spending a lot of money then in marketing those games as well. So all of these functional areas of the game development process from a very early stage now are data driven, are performance, or I should say, can be outsourced to people who are really true experts on it. And so you can be really efficient about not only game development, but then also marketing it and manage your budget. So it's not this big kind of gaping hole of spend. And now you've even, kind of established a really, really, I would say pretty tightly knit, but growing community of user acquisition marketing companies and people that are experts in that field. So these people have, really created some of these, just monster titles out there, not only in China, but also, in Europe and the US. We're talking about mobile titles that are making in excess of $1 billion a year. And there's many of them now, right? Before there was maybe just a couple 5 years ago. Now there's, tens of them out there. So, and that trend is just going to set to continue. And so I think what's happening is, the M&A side is you're seeing a lot of these larger publishers continue to acquire these kind of upstarts, because as I mentioned before, the whole game development process and the skill sets needed around it to make a game successful are very cost efficient now and very easy to do and can be outsourced. So as long as you have a small group of game developers, and I'm talking about, the game designer, the producer, the lead tech engineer, the art director, so all the kind of main components, and it could be a pretty small team, you could come up with a fantastic, game with just a small team, launch it, and it's making tens of millions of dollars. So it becomes very, very profitable very fast, because you have the ability through Steam on PC and, through the app stores to reach, just a massive, massive audience. And so that's what's creating a lot of this M&A.
That's super interesting. So maybe it's an industry that is getting to maturity. At the beginning, it started as a sort of creative studio, people which are very passionate about gaming. So it's more of an artistic, startup-y sort of flavor. And then suddenly, when you see the hype, the user, the revenues, everything gets structured and it becomes a full industry standing on its own.
I mean, that's a very good point. The industry is definitely maturing. A lot of the M&A you're seeing now should have frankly happened years ago, but I think that there wasn't the same sort of appetite from not only the public institutional investor market, but also from the private equity market. I think everybody, whether they're an limited partner in a fund, whether they're an institutional investor or public company investor, they all want exposure to the games industry because you're seeing superior returns. And so when you have all of that pressure from all of these respective parts of the economic food chain, then that's what really also promotes a lot more M&A. And so last year was another almost record year for M&A in the industry.
But let me understand, how's the taxonomy? I mean, I'm used that when you go into the App Store and you download an app, for example, a stock mobile, more likely you are behind one company, right? I mean, people like Facebook, there are one or two apps. Yeah, you have Instagram, you have accessory apps, but the main value proposition is within one single service. So I'm assuming that in the gaming, instead, you have studios which are producing a number of games. Right, so they are structured a little different from traditional tech, where you focus on one icon into the phone of people. You're trying to get a lot more attention on different targets, right?
Yeah, so that's a good observation. I think as you're saying, when you're comparing to other app companies, the other app companies are focused on one app, and that's it, right? And they'll just go all in, and they'll have all different chains or respective functional areas just focused on growing that one app. I think with game development, yeah, it's different. You have specific teams, right? So typically the way it would work is, and depending on the size of the firm, you'll have a team that'll be the initial creators of the game. As I mentioned, alluded to before, you'd have all the respective areas, art, tech, production, monetization, back-end server, engineering, and you'd get all these kind of respective people together, make a game, launch a game, and then you might even transition that team over to a new game. And then there's a handoff to a new team that's going to basically just focus on maintaining the service of that game, right? So it kind of moves from creation mode to launch mode to then service mode. And then in the industry, it moves into kind of a phase that we call live operations. So you have a team that focuses on, engaging existing users in that game through, events, through, tournaments, multiplayer, kind of mini games, all myriad number of ways to just keep people engaged and immersed and continuing to play the game. And then that original team moves on to another game, right? So that's just an example of a smaller studio. Some of the large companies are doing this. They might have 10 teams, for instance, working on 10 new titles. And of those 10 new titles, they might have very specific or a high bar of KPI thresholds to maintain or hit, to allow them to then continue developing those games. And if they don't hit those games, well, then they'll just scrap them, right? And they'll start a production on a brand new game. And I think the reason for that is, and why the game companies continue to do this is, well, there's a certain life cycle of games, right? So initially you'll get a lot of audience, you'll maybe, spend a lot on marketing. You'll maybe even get the game featured by Apple or Google, which will also then get a lot of organic traffic into the game. But the premise is really, hey, let's market it. Let's see how many users we can get, and then try to, get paying users into the game, right, to sustain the longevity of the game. But eventually then you'll have a certain life cycle. And of course, you'll still maintain a certain amount of daily active users, right, that'll come back to the game. But generally, it'll trend down, right? Most games. I'm saying most games, not the blockbuster games. So then that's the point in time where you'll do enough to service and maintain, the engagement of the existing users, but then you'll move on to the next game, right? And that next game might be completely different, or it might be similar to the game that was just released. It just depends on the vision of the specific studio and what they want to do.
That's super interesting.
Yeah.
It's a slightly different dynamic that you have, as we said, in tech companies, which are generally more about one business model, product focus, one function, and build on top of it. I don't think a gaming company can build maybe on a Slack, become $1 billion company with just one title. But then I'm curious, how's the numbers looking like in terms of, I don't know, average income from user? Because I always come from a traditional mentality. I always wondered myself, gaming is a sort of, I don't want to be rude, but entertaining / wasting my time. In a culture where you have so many things to do during the day, and if you want to achieve your goals, you shouldn't even have a Netflix if you want membership, right? And consume proper content, stay focused. The business model sort of go against what should be the goal of a human being. So how this one works?
I mean, again, I think what you.
Oh, sorry. Another question. Do you have sort of a business model for people? So does it become huge in terms of competition, earning money? So do I have an earning sort of vision in myself becoming a big gamer, apart from whoever enjoy playing game, I don't know, 1 year a day or 1 hour a day or whatever?
Yeah. So I think I'll put it to you this way. I think that, to answer the first question, right? We can't use ourselves as representative of what is the typical end user, right? So the typical end user is, let's say, the average person. And a lot of games, I mean, now the games industry is so diverse. You have very niche games targeting very niche interests, right? So of course you have the very big blockbuster games, which could be, a whole host of different categories of genres of games, right? You could have, first-person shooter titles. You could have role-playing games. You could have massive multiplayer, immersive titles, right? So there's a whole bunch of different kind of genres, that are available out there. You could have much more female focused games, like casual games that could be, action arcade style games, side scrolling games similar to games that we grew up with, like Donkey Kong or Mario Kart or stuff like that. You could have racing games, so there's a whole number of games that appeal to different people. I think that what the average person is looking for is precisely what you said. I wouldn't necessarily call it wasting time. I would say it's a way that a period that allows them, that they dedicate during the day to just shut off. Pure entertainment. So it's almost cannibalizing the time that they would use traditionally years ago to watch TV, right? So it's that dwell time that people in the TV industry refer to. So it's eating into that. And actually now, especially if you look at the younger generations who are very tech savvy, who all have smartphones that have very powerful computer chips in them, well, they're going to consume content, whether it's in the form of videos on YouTube, streaming, Instagram, playing games, or even watch other people playing games. So there's a huge communities of people who just like watching other people playing games on, Twitch, on, YouTube, etc. So, I mean, for a lot of people, this is their form of consuming entertainment, right? Who don't have the stressed out lifestyles that you or I do. So for them,
no, it makes sense. Basically, what you're saying is that you are eating into the time of the day. So you're competing versus a content provider, which can be music, can be videos, social media, and maybe betting as well. There could be another time where people detach from daily life and trying to earn a little bit more money. At least they hope so. That's how they do it.
Sure. And then to talk a little bit about the studios, I mean, there's no specific size, right? I mean, you have still very small studios that could be a 5-10 person shop, right? Studio. And for them, they could have a couple of small titles, very niche, that might be, based off of a game that's very specific to a particular country, even, right? Or form of entertainment that is very geographic dependent. And, they could be making a small amount of money, but it pays their bills and it pays their salaries. And that's all, frankly, that small studio is looking for. They're not looking to be a big, profitable, growing studio. They're very happy to just pay their costs, and they're doing something they're super passionate about. So coming to work for them is not even, a chore. It's actually a privilege. And then, you have even other smaller studios who sometimes, I think, almost fall into success. So they never assume that they'd have a chart-topping hit or something so successful, but it's being played by hundreds of millions of users, and they're making tens of millions of dollars, and they have a very small team. And so sometimes these things happen serendipitously, right? And they just manage to
Absolutely.
navigate their way, and the next thing you know, they're the next hottest company out there and getting hundreds of millions of dollars in exiting the company.
Absolutely. Let me understand one strategic point, which I was wondering why we were chatting about, especially on the mobile side. Like, for example, the fact that you have Apple going arcade, which means I'm not pushing on single downloads anymore, but basically all the studios publishing on the platform, I think are going to benefit from a share of the membership. But I mean, from a user perspective, I pay $5.99 or $9.99, and I have access to whatever game it's available on the App Store. So the question is, how's the aggregation looking like in the gaming industry? I mean, are we going into the direction that you might see a Netflix for gaming? So it's going to come up and it's going to start layering out the access to content. Is it happening or no?
So look, I mean, you have a lot of crowd streaming, gaming platforms out there. So cloud gaming is real, and a lot of people are making big bets around it, right? Whether it's Google Stadia, whether it's Epic, whether it's Apple Arcade, a lot of people are looking at this in a very meaningful, serious way. Whether, I mean, Xbox Game Pass, there's a lot of these streaming platforms out there, and the key thing I think behind it is content, right? Obviously, content is king, and so I think you're starting to see a little bit of the the cloud gaming wars emerge, right? And that's why you're seeing Microsoft even make big acquisitions. They acquired Bethesda, last year for $7.5 billion, the biggest M&A deal last year. And I think they're only going to continue to do that, buy really big, dominant, seminal game studios that then they can have exclusive content for Xbox Game Pass to ensure that end users, not only maintain their subscriptions, but they attract a whole bunch, millions of new users, right? Because they have access to that sort of exclusive content, not dissimilar from a Disney Plus or a Netflix or other let's say more media streaming platforms. So that's definitely emerging. But I think also you have different cloud gaming strategies, right? So Google Stadia and Xbox Game Pass might be taking a more PC console type approach, whereas Apple Arcade is taking a much more curated indie, kind of visually stunning approach. So you have a much myriad different type of game that appeals to a different type of user, right? Because the market is so big. Right now, you can't define a gamer. 20 years ago, you had a very different image of who a gamer was. Right now, it's everybody. It's everybody. So
Yeah,
I think
absolutely.
I think that's also changed a lot.
Yeah, I always share this question because something that really worries me is this sort of superpower aggregation which we are experiencing. When you when you watch the Oscar night and suddenly you see the brands of Amazon, Netflix. I mean, Apple sitting down a sort of film producer. Every time you touch base with someone in an industry, you wonder, am I going to have Amazon producing games?
Right.
So is everything going under one hat? Is that the trend? Is that going to happen? Scare me. Because, we're building monopolies which are so big that at some point we're going to need to understand how to regulate them because it's a bit too much. From supermarkets, media, face recognition, online delivery, gaming, movies. It's like everything into one pot for $15.99 a month. I understand the user appreciation of something so easy to access, but on the back you're basically merging into one brand different industries and killing out the traditional partners.
I mean, yeah. I mean, look, the Amazon example is pretty. Yeah, it's definitely something that causes pause and concern. I think Amazon Game Studios. The good news is I think they're still figuring their way out. They haven't really done a lot of big acquisitions, and they're still trying to figure out their strategy. Their game, their app store is nowhere near, kind of dominant like Apple or Google. And I don't really see Apple or Google getting into the content game. I don't think that's something that really appeals to them. I think Apple Arcade is their kind of first foray into like, hey, let's see how this could work. But I think they view themselves much more as a platform or gatekeeper, right? Like they are with the App Store, which is, hey, we're the gatekeeper. We're going to enable all kinds of content to get out there, distributed through our platform. And I think Google as well, they view themselves more as a tech company first, a software-driven business rather than a content maker. I think the two big players that really want to make a more of a real concerted effort into content, definitely Microsoft and probably more Sony, right? I think Amazon is kind of on the side, still figuring things out. So I think when you look at all the big players from a gaming perspective, that's kind of where they're sitting.
Let's see how the future is going to play it out.
I mean,
Yes,
yeah, it's going to be exciting. There's no doubt about that.
yeah, absolutely. I'm still very much not in love with monopolies. I always never liked them, and I always wonder how the industry and the whole ecosystem is gonna play out against this aggregation. Because I'm assuming there's gonna be a lot of people that think the same. So one thing is providing the platform, and there is a technological argument that the more standard you have in platform, the less platform you have, the better is somehow, because interoperability, everything gets easier, payments, everything is controlled and easy. But when you start tackling the content and the actually product of that specific industry, it becomes a big monopoly. Because
Yeah,
it's true that you buy companies, true that you acquire teams, but still they fall under one corporation. So you absorb the creativity and the entrepreneurship of an industry into large corporation, and that's a sort of tricky future for me.
So I agree with you. The good news is there's a lot of game companies out there that never want to be sold. They're very successful, very, very, focused on remaining, independent, and I don't see them ever being sold to, an Amazon, a Microsoft, a Sony, etc. And even in the event that they do, because maybe they're financially motivated to do it, I don't see them lasting, especially the founders, more than a couple of years at any one of these organizations, and they're just going to go off and do it again, start a new studio, take a lot of the creative brain trust that made those games, and just go off and do it again. I mean,
I believe that there is an ecosystem self-adjusting behavior that is not going to never really play out and have the strategy.
No, I think the only reason for a lot of these game developers to do it is just to say, you know what? Okay, I exited for hundreds of millions. I have my generational wealth. I don't have to worry about anything from a financial perspective. I'll hang out here for a year or two or whatever my contractual terms require that. And then once that's done, they'll go off.
I'll get back to my job.
This
is actually a perfect lead into a topic I want to touch with you, which is SPAC. Because, the perfect lead, because in some sense, acquisition is the only way to capitalize and actually put your generational wealth in the bank account and not worry about the future. But then actually listing has always been one of the other avenues, which have never been that big in tech. We've seen big brands as Slack, I think Coinbase now, the crypto side is going public. But compared to the number of operators, I would say that the rate, I'm not sure what it is, but it's quite low. And then I recently looked at this sort of SPAC trend, which looks like it's getting traction everywhere around the world and in every industry. I know you have a bit of experience, and I wanted to, strategically, I think it's a way to exit companies. So I don't know what's the relationship there is with the studio and the SPAC. I'm assuming that it's deeper than, or as deep as an acquisition, because somehow you have to have a deal ready before you launch the SPAC. So there should be a lot of chatting, discussion, and then maybe, I don't know. Let us know what's going on. I'm very curious.
Sure. So, it depends, right? So the SPAC concept is not new, right? So they were basically blank check companies way back in the late 90s and early 2000s when the market was super hot and there was a lot of money going around. And basically what those blank check companies did was find interesting operating companies that were profitable, and they would just reverse into the blank check companies. Due to a lot of financial regulation after the crisis in 2008, it's not that easy to set up a SPAC now, right? So you need to have a certain track record. Most of the SPACs that are going out there are raising at least a couple $100 million. They're abiding by all sort of corporate governance rules. These are pretty capable management teams, right? They really.
Yeah, what I've been reading, sorry if I interrupt. What I've been reading is that due to the lack of new IPOs in stock markets, actually the SPAC is becoming sort of looked after in a different format by stock exchanges to create a sort of differentiation in the product, because we are stuck with the same company. While in the past you had a lot of IPOs. If you go back, I think before the 90s, you had a lot of company exiting in the stock market. So obviously speculation of a SPAC from a regulator perspective is, I keep them out of the table because I have enough IPOs coming on my plate, which are company structure and the management, they are in the right process. Why now, with the lack of application to list, the opportunity of management team to actually force that listing, it's becoming interesting from stock exchange. That's, I think, is my interpretation right now.
So generally there's been a trend, right, since going back a while, where there's just been less and less IPOs. And I think there's a number of reasons for that, right? One is just a flight to quality. More investors are focusing on just investing on more, just well-run businesses. But also, since the financial crisis, especially since 2008, there's some really, really, significant regulation and corporate governance that any new listing or any new IPO or candidate has to adhere to. So it's a prohibitively expensive process, and not only to list, but also to maintain corporate governance, accounting rules, mainly to protect the retail investor, right? So all of this legislation was passed in the U.S. predominantly to protect the retail guy, the little guy. Now, what has that done? So that's forced a lot of people who would be pretty
for the banks, though. Not for the banks. Every time we touch this subject, I say we paying private companies the mistakes, because I think that the 2008 crisis was more derivatives, real estate,
correct.
Packaged up loans.
Absolutely.
But then the problem goes on IPOs and private companies that want to get listed.
Well,
anyway,
I mean, look, yeah, that's a whole other podcast.
That's a whole other subject. Yeah,
that's a whole other podcast.
That's a whole other subject.
But yeah,
let's go on. Let's move on.
I'll leave it at this. There's a lot of people who should have been fined, who should have been taken to court, who weren't, and basically largely the general public suffered. So the SEC's response was, well, let's make it harder for companies to go public. Let's put in all these rules, regulation, and that's also been a big contributor why there's just not that many IPOs out there. And so what the new SPACs offer are really seasoned professional teams, guys that all the public company institutional investors can trust to execute an M&A strategy, guys who are very well versed at talking to them, they can rely on when they're going through earnings reports, etc. And so they've kind of fulfilled to some extent that void or that gap, right? Which enables a lot of private companies who do have pretty interesting growing businesses, but just don't have the requisite skill sets to be a public company, don't understand how to talk to public company institutional investors, or want to deal with the hassle of corporate governance, directors' liabilities, maintaining, all of the, administration of being a public company.
So somehow the SPAC provide, to use a simple language, a sort of listing as a service for the private business. So I do the process. You take the corporate, if you want, compliance set by selling into myself because I'm already structured. And then you can carry on doing your daily business as you were doing before, with just a sort of different access to capital and ability for future growth. That's somehow a simple way to look at it.
It is a simple way to look at it. I mean, typically it depends what, as long as there's a meeting of the minds, right, on what the roles would be. Typically, the company reversing into the SPAC will have a pretty large market cap, because usually these are going to be bigger companies. And so the vast majority of shares or new shares used to acquire this entity that's rolling into the SPAC is going to be owned by those original companies, company founders, right, or investors, right, whoever they happen to be. And then typically the CEO of that acquired company or reversing into the SPAC, they'll also get a board seat, but maybe their chief product officer. It's unlikely that they'll become the CEO. Usually it'll be the SPAC management team. They'll maintain the CEO, and usually they'll kind of say, hey, we're going to be responsible for an M&A strategy, or we'll be responsible for kind of being the front end facing side to the market, to investors, and then we'll let these guys continue to grow their business.
So what have you seen in the market? Single deal SPAC, a little bit like, I don't know, Virgin Galactic. I think the Virgin Galactic was taken public by Chamath and the Social Capital into a SPAC. If I'm not wrong.
I'm not too familiar with that deal, but I mean, there's been a bunch of gaming studios who've reversed into SPACs, right? Even in fact, last week there were two deals. There was a Russian SPAC called Kismet Acquisition Corp, and there's a Russian company called Nexters, which reversed into Kismet. And then in the U.S., there's a social casino company called Play Studios in California. They reversed into another U.S. listed SPAC called ACES. So yeah, there's a lot of activity in the gaming sector. Both
As a
those.
curiosity, you see more the SPAC, I don't know, being created specifically for bringing live for listing a specific deal, or then you see a sort of further reversing into the same SPAC of other deal at other companies, which is more like we're going to build a portfolio rather than bring public one studio.
I think it depends on the SPAC, right? So different SPACs have different strategies. Usually they'll say right at the outset, like, hey, we want to focus on, the video games industry, or, whichever industry that they're looking at. And the strategy used by a lot of the gaming SPACs is they will take one studio that's big enough. I mean, if you look at the AC's Play Studio deal, after the reverse merger is complete, it's going to be valued at, about $1.1 billion. And then the next year's Kismet deal, that's going to be valued at just under $2 billion. So these are big companies already. They're quite profitable, big companies. And I think what will happen is both those companies, the management teams, will continue doing M&A on or bolstering those existing businesses. So they'll do like bolt-on acquisitions for those businesses. Now, what's also happening is a lot of those management teams might do one SPAC, and then once that one SPAC is complete, they'll go do another SPAC, and it might be focused on another game studio, as an example, right? After completing one deal. So there's definitely, people out there who have access to capital that are just doing this on a regular basis.
Yeah, because I've seen a trend, or at least I've seen. I also believe there is an opportunity for venture capital exits into SPAC.
Sure.
And I mean, I'm a venture capital. I start from the seed. I follow through my companies, or the good deal company, up to Series A, Series B.
Mm-hmm.
And then maybe I have a big enough valuation and opportunity of growth that is better to build a SPAC and list the business, which I basically get to pigeon with one stone, because
Sure.
I get it out of my portfolio. I realize the exit as a venture capitalist, but at the same time, I create myself an opportunity to keep on growing and working with the team in the future. So I've seen few people started looking on this perspective. And then I've seen actually external teams, so investment bankers, more professionals with a specific understanding of a particular market like gaming, decided that would have been a way to actually make money and help the industry. So I have the knowledge, as you said, you have the product. Let's see whether we can build the vehicle. And I'm trying to study what is the infrastructure and how the portfolio is built. But what I've learned until today, that it seems like the venture capitals tend to do a single deal SPAC because it has to really look like an exit. Somehow, I mean, when the target company is going to reverse into the SPAC, the ticker is going to be the company that is reversing. So maybe Slack would become the SPAC.
Yep.
To do an example that everyone knows, in the way that's become the ticker, that's the future company. While in other SPAC, you see more of a sort of non-financial holding approach, which means even if the studio is reversing, it's not going to take the name because you want to acquire more companies.
Correct.
So somehow you are creating, either with your first deal, you are creating the brand, or anyway, you want to create a sort of aggregation of portfolio companies in the same industry that make more value together than independent, right?
Sure.
That's pretty much the two trends I've seen.
That's exactly right. I mean, it just depends on the strategy of the SPAC, right? And what the team, the management team wants to do, right? If they want to do kind of a mini roll up, cool. Or if they want to buy, one big company and then do bolt-ons on top of that, right? It just depends on what's their strategy, how they want to execute.
But do you think it's a sort of opportunistic trend that is going to go on for maybe a few more months, few years, and then we're going to get back into a sort of standard environment? Is going to last?
I mean, if you look back at the blank check companies, if you look back at the blank check companies in the late 90s, 2000, just before the kind of .com crash, came around, they were getting a lot of hype. And if you again, you can't necessarily compare that period to this one, right? They're two set, you are comparing a little bit apples to oranges, but you had a lot of similarities, right? You had valuations that were sky high. You had a lot of money in the market. There was a lot of frothiness. And those blockchain companies after the dot-com crash pretty much went away, right? They went out of fashion. So again, I think as long as there's deals that are being done at rational, reasonable valuations in the market, then who says they can't continue to provide an interesting vehicle for companies that don't want to go through themselves the whole listing process, the hassle, etc. They can just run their business and let some professionals run the company, right? In a public company context.
Yeah, which makes sense. I always tend to think the frictions become product and services. That's somehow the trend that we've seen in the last maybe over 15 years. That's all about innovation. I find the friction. I make sure that the friction is experienced by a large number of consumers in the market. I find a way to give it a solution. I find a way to monetize it, and that's my new startup, right?
Sure.
So considering the regulation is still a very high barrier, and the fact that maybe SPAC sit in between as a sort of layer to facilitate the entrance of good businesses into stock exchanges and actually public money, because that's what it is. I mean, we've seen 10 years of maybe too much private money, because private equity and VCs, no, it's a very good run, but I mean, back in 2005, 2007, you have the launch of the iPhone, right? Then you start talking about startups and apps. And if a venture capital fund has got a 10 years uh, term, it means that we get to 2015, and somehow we are crossing over the last 5 years of investment of fund two, in case that has been the way that the funds are raised. So I think that right now is the time where we're wondering about what's going to happen next. No, where's the exits? Are
Well, yeah, I
corporations
mean,
going to buy the portfolio, or we're going to have to list it? So at that stage, if the only problem to the public market is the regulation, the hassle, no, the friction, the cost, that could be a way that venture capitalist and investment bank can create a layer. That's why I call this listing as a service that becomes the way into the stock market. So it doesn't have the connotation of the speculation back in the 90s. And that's, I think, is the difference. It's not about chucking stuff in and make a lot of money, but it's more about working together with the stock exchanges to increase, to facilitate the listing of companies, and also increase the number of companies listing in a stock exchange. So it becomes a sort of natural infrastructure. That was my thought.
Yeah, I mean, I think that SPACs, they offer a lot of advantages, right? Especially if you've achieved a certain size and scale. I think it'll be interesting to see what happens in the coming years if they remain, attractive. And of course, it also depends how opportunistic the people are, right? I mean, I think the first SPACs that came out had really good teams, really good visions, really good strategies, executed well, did good deals. The market responded very favorably. But again, if things start to get frothy, people start to get greedy, then these things fall out of favor, right? So, and of course, you're going to have some SPACs that'll blow up. But I think as long as people remain committed, they have a good strategy, they're executing that strategy, then I think it's a pretty interesting option for companies that just want to remain private, or only looking at private equity as a way to get out some liquidity. So I think it's definitely an exciting.
I agree with you. Let's see how it's gonna play out.
Yeah.
Listen, we just got to 48 minutes, so maybe I'm gonna steal the last 3-4 minutes, and I would like to touch the sort of more, how you say, personal topic on gaming, no? Because I know you are a parent, no? I am as well. And I was curious. I've seen huge community of kids, right? Like Fortnite, for example, is a big eater in the 10, 11 years old, which is what is shocking, from a parent perspective, is that you see these kids who sometimes they tell you, oh, listen, I decided to bring you on holiday to the mountain for, I don't know, snow week. And the kid actually, the first question which is asked is, are we going to have Wi-Fi in the hotel? No, because I need to play the game with my friends. So how's the industry looking at this sort of, how you say, obsession that sometimes you create in particular categories. And the other question will be the risk of having people jumping in the communities.
Of
And
course.
do you guys have a view? Because the question with parents is always, who's going to be in there? Who's going to be chatting with my kids? No, can they open a private room? Can they get in there someone who is with a different phase into the community? You always think that they are 10, 11, 12 years old. So since you know very well the industry, what's your feeling on this? I'm just curious because I don't know it, so maybe I'm more scared than someone that knows it from the inside out very well.
I mean, so for a title like Fortnite, which is massive, right? Absolutely massive, run by Epic, one of the biggest game developers in the world. I mean, they have, a tremendous amount of support in terms of people moderating, right? Firstly, they have automated computer bots moderating chat, moderating, language going on in the communities, etc., as well as physical people also moderating stuff. And they have pretty sophisticated ways to flag, any sort of language or exchanges that could be salacious, that could be malicious, that could be, just really, inappropriate. Of course, look, realistically, you're managing, millions and millions of people. There's obviously instances where things fall under the cracks, right? And there are instances where sometimes, you do hear about certain things, but generally speaking, the vast majority of the time, any perpetrator is caught, right? The vast majority of the time. But of course, look, as a parent, as I would be with my kids, I'm pretty vigilant about what they're playing, how long they're playing it, and try to maintain pretty strict controls, because you don't want them to just dedicate too much time to this, and you want them to be just kind of more well-rounded. And if you're going up to the cabin for a ski weekend, well, they should be focused on skiing. And if they want to play half an hour of Fortnite at night, okay, fine, give them half an hour of Fortnite, but that's it. I would say.
My worries is always that is the first time that we are facing this sort of technology revolution, but with also social media and community. That's the scariest part, because it's not anymore I invite my friends at home and we're gonna play Mario Bros as I used to do when I was a kid, or play Donkey Kong or whatever. So we all sit together,
exactly.
we have a joystick in our hand, and we have fun challenging each other into.
Exactly. It was a social experience.
This is all virtual, so you see these kids sitting in the room, spending many hours interacting with people abroad, which is good because it's like the social. You have international interaction, but at the same time, they tend to get stuck into the sort of one-to-one with the screen, and that's what really all the time I ask the question, and I'm saying I'm curious to see the views.
So definitely in some countries they have parental guidance controls, right, on games, so they have clear, clear laws in place on, not allowing kids to play certain games, especially the more violent games, or more, in the kind of more survival or horror classic genre games. So yeah, there are age restrictions as well in most countries, especially in the EU, that takes it pretty seriously. But again, let's be honest here. If a kid really wants to play a game,
he's gonna play.
They're going to play it, and they're going to find a way to do it. It's just that's the world we live in today. So I think as a parent, it's kind of your responsibility to just be on top of what they're doing. You can't restrict them completely, right? Because then they'll do it behind your back, and you don't want that either. So you just got to find got to balance, sort of how you manage that with them, right? Or ideally, what I would do, once my kids are large enough and grown enough and are playing certain games, I'll just play with them. That's the advantage I have, is because I'm a gamer as well. So I'll just go in and play with them. Of course, until I'm not cool enough, but I can then, of course, disguise myself and play in the other room and try to join their clan or guild, of whatever game they're playing, to just know what's going on. Of course, most parents don't have that time or want to be as vigilant, but yeah, there's ways you can try to combat it depending on how much time you want to invest.
Cool. But it was interesting because I never thought about the bot and the artificial control. That's a very interesting point because somehow that's artificial intelligence applied
Just
in the
yeah,
right way.
sophisticated, pretty
So
sophisticated.
the ability to be so much on top of community in chats that you can really identify within a second every abnormal sort of interaction.
Sure,
So
sure.
at
And
some
it's all
point,
real time as well, right? So they're always adding different combinations of sentences that might be suggestive or different spellings. So in real time, they're always adding to their blacklists, games, words or phrases that are inappropriate, right?
so basically, you must have a sort of behavioral analytics.
Oh,
So
sure.
you know how's the behavior of a normal player. If someone comes in the community with a sort of abnormal behavior, you would identify straight away. And then
Sure.
language analytics,
Of
and then
course.
community interaction. That's actually very interesting.
Yeah, yeah, yeah. No, there's big companies doing that now. Definitely.
Cool.
Yeah.
Listen, Sham, thank you very much. It's been a very interesting chat. Appreciate your time.
No, thank you. Thank you very much.
Very happy to host you again whenever we find another interesting topic to chat. And for the
Absolutely.
time
Look
being,
forward.
I'll thank everyone and we'll see you next time.
Great. Thank you, Sergio.
Thank you, Sham.